Hey everybody, Jared Duckett with Duckett Ladd with my business partner Ryan Hatch, aka Buzzsaw. How you doing, buddy?
Good, man. How are you doing?
I'm doing good, man. Jump on here and just shoot a quick tax tip video, if you will. Just something that we've been talking to a lot of our clients about, specifically going into the right now we're January, January 26th, but going into the end of the year, beginning of this year, trying to get all estimated payments in, is what that underpayment penalty looks like for estimated payments, what that means, and just really hit about I'm gonna call it the changes in it regarding the interest rate and that sort of thing. So just dive in on that just a bit.
Yeah. So, I mean, we're all aware interest rates have been rising over the past several years. And with that comes a rise in the underpayment penalty that the IRS has been assessing on quarterly estimates that aren't made. So, if you go back several years to 2021, they were only charging 3% on those underpayments. Well, as interest rates have risen, it's gone up 4, 5, 6, 7% last year. Now, starting this year, it's up at 8%. In 2024. So if you don't pay your quarterly estimates and wait until the end for 2024, you're going to get hit with an 8% underpayment penalty on that balance. That's kind of what we want to start talking about, putting in your head is, hey, if I'm holding all that money trying to invest it, maybe I'm only earning 5% in a money market, but I'm getting charged 8% by the IRS. Probably not a good decision.
Yeah, IRS is thinking through these things, aren't they?
Right.
Yeah, so you're exactly right. What you just said spot on is a lot of clients and other individuals kind of keep that money. They say, hey, I'm not going to pay it into the government. I'm going to make my own return doing this. And you said like back in 2021, or would you say 2021, it
Yeah,
was 3-ish
3%.
percent.
Mm-hmm.
Now it's 8, right? So just know if you're going to still do that strategy, you got to make more than an 8% return because that 8% penalty is going to be kicking in. So IRS is getting a little, they're smarter than what we think. I mean, they're
Yeah.
increasing that and taking advantage of it. Talk about just real quick, because let's talk dental practice owners here, right? So a lot of dental practices, S corporations, that dental practice owner gets that reasonable wage, gets that W-2, right? How does the withholding through that W-2 work in regard to the underpayment penalty?
Yeah, so there's a couple ways you can pay money to the IRS, right? You can pay quarterly estimates, which are outside of traditional payroll, and then you can have payroll withholdings paid to the IRS from your W-2, quote unquote, at the end of the year. And if you do it through payroll that comes in on a W-2, those payments are treated as paid ratably throughout the year. So it kind of counts as making all 4 quarterlies if you wait and pay it through payroll at the end of the year. And you're not going to get hit with those underpayment penalties doing it that way. Whereas if you held off on paying quarterlies and just paid it as a quarterly estimate, you would get hit with that underpayment penalty.
Yeah. So kind of just a little nuance to how the W-2 withholding works. We hear a lot of our clients do that bonus on a W-2 and pay in. So if you pay it in by the end of the year, that's key, right? By the end of the
Right.
year, it's going to be recorded on that W-2 paid in ratably throughout the year. So kind of a little strategy there that you might think through. But key point of the video, what we wanted to emphasize, interest rates, let's call it underpayment penalty rates going up significantly, 8% going into Q1 of 2024. The old strategy of keeping that money, making a higher return elsewhere is getting a lot tougher. So we're recommending, all our clients, if they can make those estimated payments. If you're our clients listening to this, we're always staying in touch with you regarding what safe harbor payments to pay in for Q1, Q2 of this year. But was trying to stay on top of these tax changes, and there's no notifications usually like these interest rates increase. It just kind of, they like sneak it in there, right, Ryan?
Yeah. It sneaks up on you when you look at your taxes and you see that penalty on there when filing time comes. It's like, whoa, how did that get so high? But it's because of this interest rate environment.
Yeah. Yeah. And a lot of you guys pay enough taxes as is. And so we don't want to pay any penalties on top of that if you guys don't have to. But anyway, Buzzsaw, appreciate you as always, man. We'll try to stay on top of the tax stuff and shoot videos when we can. But buddy, I appreciate you, man.
Sounds good. You bet.
Talk soon. See ya.